And today we'll also discuss about the PMS side of the mid-cap business and what essentially some of the new AMCs have experienced in this mid-cap carnage. Aashish Somaiyaa joins us, CEO with Motilal Oswal Asset Management. Ashish, fantastic to have you back and thank you for joining us. Okay, everyone is blaming it on the PMS schemes. PMS वाले माल बेच रहे हैं. Market इसलिए नीचे जा रहा है not because valuation लफड़ा है, PMS वाले माल बेच रहे हैं. सच्ची कहानी क्या है भाई? What is true?
No, so so that translates basically to whether we have inflows, outflows, and what kind of activity we are really doing. So if I tell you factual numbers, and these are reported, public kind of numbers, you take last year's data for my company. I can't speak for all.
Of course.
We were netting about 300 crore of inflow pretty much every month.
This is in PMS schemes?
In PMS, okay. Yeah. Last financial year.
Okay.
This financial year, one quarter is over. I can't say it averages to 300 crore kind of inflow. It would be down by about 50%. So it would average to more like 150 to 175 crore kind of number on an average. But
the underlining word here is inflow. It is not outflow.
It's the net flow, yes.
It is a net
It's net positive inflow.
Okay.
And plus, of course, there is a perception that PMSs have to be mid-cap, not true. We manage roughly about 15,000 crore. This is again public data. But we are half and half. Like, the largest portfolio is all cap. It's about 7,500 crore, it's all cap. So it's not that it has to be all mid-cap really. And you mentioned something about, selling and those kinds of things. Look at it this way that the regulatory changes have actually opened up more space for PMSs, right? I mean, there is a huge mutual fund regulation change which tells me that out of a 9 lakh crore mutual fund industry in equities, pretty much 8 lakh plus has to be concentrated into the top 250 stocks. This is the net of whatever, long story short of what has happened in the last few days. So PMSs are obviously not involved in this whole, and I manage both, so I have no, favorites. But
so what explains this sell-off then, according to you?
There are many things. I mean, one of them can't directly correlate, but one of them is this: that in the last 6 months, pretty much 8.5 lakh crore of the entire mutual fund industry has been told to focus in the top. Yeah. Basically, translates to top 250. Now, top 250, if I'm not wrong, ends at 12,000 plus crores. So the whole everything below $2 billion is there. The second thing, if you see, is there have been many, regulatory changes otherwise also, increases in margin, ASM coming in, so many stocks being monitored and, put into price bands and stuff. Plus, of course, the whole thing, if you see last year, the mid-cap index went up 48%. If it goes down 15% this year, you have no right to complain really. The small-cap index last year went up 57%. It falls 20% this year, can't complain too much. And there has been this rotation where people have been saying, okay, let's move to IT and pharma, let's move to large cap, rotation in the market, overvaluation, so many things going, the scenario changing like oil prices and the mood on politics and stuff, maybe a bit of risk off kind of behavior. Last thing I want to highlight is that if you see last year, including us, most professional managers either stopped taking money in mid caps or reduced the flow. So if you have a natural outflow, but you're not accepting money, I mean, up until few days back, we were not accepting money in mid-cap PMS.
Now you are?
Now we are. So all of these things add up, right? I mean, but let me tell you on your question, it's not resulting in net outflows. It's still net inflow.
That's very interesting actually. We would have thought that, that's the kind of pressure that one would have seen on flows. The problem with a fall like this, Aashish, is that quality names also come off, right? So, I mean, what is the approach? Because for a lot of mid-cap funds, the questions that we get asked very often is, how do you can't catch a falling knife, but how do you still try to mitigate the downside risk?
So, look, I think a lot of times when we are comparing, like mid-cap funds, mid-cap PMSs, inflow, outflow, falling knife, look, intrinsically PMS investors, they are generally the affluent HNI, generally more tolerance levels for risk, that is one. Second thing, the whole dynamics of PMS and mutual funds is 180-degree opposite. There is no comparison between the two. You look at it this way, in a mutual fund, it's a common pool of money. They get inflows every morning, pretty much. In the last 2-3 years, great markets, great performances, everyday inflow. What happens in a PMS? If you give me money today at today's buying price, the stock is bought, credited to your demat account. You hold it on for next 3 years, 5 years, 7 years. You have nothing to do with how many of my clients give me money, where they go out, etc. So basically on catching falling knives, two things. One, if you are a investor who has the gumption to buy at a good valuation and hold it for the next 3, 5, 7 years. Second thing, there's no concept of averaging practically in a mutual fund. In a PMS, there is a model portfolio concept. So if you average it, you know exactly in what allocation, what stocks are being bought. Whereas in a mutual fund, when an inflow comes, subsequent inflows can be used to realign an existing portfolio. That's not practically averaging, right? So anybody who's an investor who has some risk appetite, willingness to buy a portfolio and just hang on to it for some time, they'll always outperform a fund which is getting daily inflow, daily outflow, buying, selling, portfolio changes on the margins. They are two different things altogether.
So now that you are accepting fresh monies, where is it that you're deploying that cash? Is it at the top end of the market cap or still at the low end?
No, our belief has been, and I think you had conversations with my team before. Our belief is that you will find value in the next 2, 3, 4, 5 months, because if you see in the last 1 year, at least I can say for some of our portfolios, year on year the earnings growth is in excess of 20%, right? And on the other hand, the portfolio values are down by about 15%. So I'm not going to call the market, but what I can say is that eventually value will emerge. So we will buy purely what we call mid caps, and for us what we call mid caps is not in a PMS. There is no regulatory definition. They are typically open. So we will buy on an average 8 to 10,000 crore market cap. That's our weighted average.
So let me do something which is your job to tell your distributors in terms of the fund performance. I've looked at your fund performance from December 2007, which incorporates the 2008 financial crisis fall, and then from 2010, which means if you bought before the fall and if you bought after the fall. We're using Nifty 500 for benchmarking purposes, and this is something what I want our viewers to understand, that what the Nifty has done or the Nifty 500 has returned, and what the PMS schemes and individual active fund managers have given, and the outperformance here has been very stark. So in India, my long stand has been that you have to acknowledge that active fund managers are doing a great job. Why? Because this is a market where maturity levels are not great, and whenever markets they go through this kind of an fear psychosis, value gradually starts emerging. That's the data point, and this I'm assuming is been calculated after what the AMC has charged in terms of commissions and also in terms of fee. But past performance is no guarantee of what lies ahead. There was a note which I think came out from Mr. Agrawal where he told some distributors that, guys, it's time to hunker down expectations. But that's an old note. That note, in a sense, or that communication I think happened in Jan, right?
Yes.
Now if he has to, let's say, tell his team of distributors, is he telling you that you go to your clients and say, boss, paisa dalo, it is time now to start buying the fear? Are we reaching there yet?
So as I said, on your question on mid caps, since we are taking money, and I know for a fact, our belief is that it's time to start nibbling, right? So we are actually communicating that, and when you stop taking money in December, January, and you again start taking money, then there's nothing left to, as Mr. Buffett said, don't do what I say, do what I do. So that's demonstration.
So my next follow-up question would be that, whereas you're talking about net inflows, and it's quite heartening to see that it's positive, I also want to understand the ticket size. In SIP, we have a sense of the ticket size.
Yeah.
In the PMS inflows, are rich HNI, ultra HNIs buying? Is this fresh token investors? I think the minimum token size would be 25 lakhs?
The regulatory minimum is 25
Okay,
lakhs.
so where do you see inflows increasing, decreasing? What's the trend in terms of the ticket size?
Average ticket size is 75 lakhs, 65 to 75 lakhs.
And is that increasing?
Average ticket size has been increasing. One is because of regulatory action, and second is also because of conviction. So because what happens typically in a PMS, like I was just explaining to Tanveer, people know, you can see your portfolio. You log into my website, you can see exactly what I'm holding, percentage allocation. So the conviction to do a top up and add more is that much more, because in a mutual fund there are 70 stocks. I mean, what are you actually averaging?
How many average stocks do you hold in a PMS?
We don't have any portfolio with more than 24. So it's ranging between 18 to 24. But frankly, that applies as a house. Even our mutual funds.
The sense which I get from other funds is that, look, quality works, but quality right now is so expensive that that may not be the best case bet. Also, the concentration of your schemes is too much in financials, especially private financials, 35-40%. Is that a risk?
So a couple of things. See, one thing about quality, these are all matter of opinion. You have to do where your heart lies and what you are convinced about. So I can't say what's right and what's wrong. People have opinions about it. But one thing about quality is, look at it this way, that when the tide goes down, then you need earnings to support, so you need a backstop. The second thing about us is that we don't mind time corrections. You know, on hindsight, if I know that I got something at the wrong level, then what we tell our investors always is that, okay, you get return back-ended. You know, there is a time correction of a couple of years, and it's not like 24 stocks in the portfolio are time correcting, right? Second. Now we come to the other important point about financials and the portfolio. Financials itself has expanded dramatically. You see few years back it was PSU bank, private bank. Now it's private bank, mortgage companies, consumer finance, insurance companies, asset managers, microfinance institutions. So even if you do bottom
AMC
up,
is coming soon.
asset managers coming soon. Yeah. So even if you do bottom up, even if you do fundamentally, like our portfolio is called next $1 trillion. So when GDP grows, your per capita goes from $1,000 to $2,000. It's basically financial services and consumer and auto, which actually.
But in this decline, are you turning contra also, or are you sticking with quality? Because that may give you a higher beta, right? The underperformers.
So frankly, we don't do too much of contra investing. Definitely, we would make switches on a relative valuation basis. But how I see people looking at contra, the market definition of contra is do something which is way against consensus. We are generally against consensus in the sense that people think that everything we own is expensive. Whereas what we think is that to make money, in our style of investing, to make money, two things have to happen. One is either your hypothesis of growth has to be superior than what the market thinks, or your willingness to hold has to be longer so that you capture more of the growth. And we write it black and white, that it's high quality, high growth, and it's longevity. It's written in black and white. So our investing is contra in the sense that everybody thinks we are holding very expensive, and we think we are contra because we are either going to hold for a higher growth or longer.
So not the traditional contra.
It's not traditional contra.
So a PMS strategy works really well for the high ticket investors. For retail investors who are seeing this carnage, we had Mr. S. Narain from ICICI Pru a couple of weeks back on the channel, and he said, look, if there's more time-wise correction in store for mid-caps, go the SIP way for mid-cap funds.
Yeah.
So is that that you'd be advocating as well, that piecemeal, spread it out, but don't give up on the mid-cap funds just because of the correction in returns?
Yeah, because there will value which will emerge eventually. Number one, it's already started happening. Secondly, I completely agree with what Naren mentioned. I just used a different word, which is to start nibbling basically, because, and by the way, people can do SIPs in PMS also. I think people are not aware of it.
Okay.
But you can.
At a low value.
Yeah, we have all these payment gateways and stuff. People can register. I mean, on our website, people do it actually. It's just a lesser known fact, but it happens.
Which is, what has been your biggest realization in this fall?
In fact, I was just going to tell Tanveer that, it has nothing to do with the ticket size. It has all got to do with the mental makeup and what you actually came in with. A lot of people tell me that high net worth investors are fickle minded and SIPs are very, very stable. And in fact, I heard something funny yesterday, because it is anticipated that the June net flow will be more like 7,000-8,000 crores. So somebody said, "Dekha khali SIP ka bacha." I said, money is fungible. You don't know who actually.
So just one last closing comment, and we'll not extend our appointment with you. When you talk to your distributors, when you talk to your HNI clients, do you think that you will be able to grow because of market share gain, where you're gaining on account of some other AMC losing, or you think there is an explosion in the PMS market, in the equity market, where the structural shift which started a couple of years ago is only going to get elongated? Right now, it's like there are certain categories where we are just gaining and losing market share. The category is not expanding.
Yes.
But in your case, where do you see
there is
things
expansion?
moving?
Yeah. So a couple of things. One is the overall mutual fund space itself is expanding dramatically, but we are not talking mutual funds. We are talking more the PMS way. There are 2 or 3 reasons why there is a tailwind. One very clearly is that PMSs have huge pricing flexibility. So if you invest a large sum of money, a mutual fund doesn't have share classes and stuff. You can't calibrate the pricing. In a PMS, you can calibrate the pricing. That's first. Second, a lot of wealth being created actually is being created by way of stock options and ESOPs and stuff. So people are already used to the concept of owning shares in a demat account for 10 years. They are used to that concept, right? Third thing is that I said it before, that if you are someone who's going to buy a basket of stocks and hold it for next 4 or 5 years, and you don't care for 12% allocation or 2% allocation. See, in our PMSs, we own sometimes stocks are 14 to 15% of the portfolio, and they are held for like 7 years, and nobody can come and tell us please sell, because it's an understanding, it's an agreement. So many reasons why there are tailwinds, and I think that people don't understand the differences between PMSs and mutual funds, and making the comparison in last 2 years of inflow and a big ride up, if you make comparisons in a limited time frame, you won't get the essence of it.
Well, great conversation, Aashish.
Thank you
Thanks
very
very
much.
much for stopping by and sharing with us your perspective
Thanks
on the
for calling
mid-cap
me.
fall, on how PMS investors can take advantage of this opportunity as the market corrects itself and in a way readjusts its price levels.